Hey, what's up, guys? So, you may have heard about the recent collapse of Silicon Valley Bank, and you're probably wondering what the heck happened? Well, it all started when the bank invested heavily in United States government bonds, which are usually a safe investment. But when the US Federal Reserve raised interest rates in response to inflation, the value of those bonds started to fall. And that's when things started to go south for Silicon Valley Bank. To make matters worse, many of the bank's tech startup customers began to draw on their funds to stay afloat during the pandemic. And with Silicon Bank short on cash, they were forced to sell their bonds at a big loss. This caused concerns about the bank's financial health, and within 48 hours, depositors had withdrawn enough funds to cause the bank's collapse. So, what caused all of this? Experts say it was a rookie mistake in the bank's interest rate. Risk management. Basically, they invested short term deposits into long term bonds. And when interest rates rose, the value of those bonds plummeted, wiping out the bank's equity. It's the same thing that caused the U.S. savings and loan industry to collapse in the 1980s. You'd think people would learn from history, but apparently not. So, what's the lesson here? Well, it's important for banks to diversify their assets and not rely too heavily on one type of investment or customer base. Silicon Valley Bank was catering heavily to the tech sector, and when that sector took a hit, the bank suffered too. It's crucial for loan books to be diversified and not put all your eggs in one basket. One of the biggest issues is that Silicon Valley Bank has a ton of deposits. Now, normally, this wouldn't be a problem, but the thing is, a lot of these deposits are uninsured. That means that if something goes wrong, people could lose a lot of money. The government does insure deposits up to $250,000, but anything above that is considered uninsured. And because Silicon Valley Bank caters to mostly startups and wealthy tech workers, a lot of their customers have deposits that exceed that amount. Now, here's where things get tricky. The Federal Deposit Insurance Corporation has said that insured deposits will be available on Monday morning. But the problem is that most of Silicon Valley Bank's deposits are uninsured, so the money can't be accessed right away. And you know what that means? It means that businesses that rely on Silicon Valley Bank might have to wait weeks to get access to their funds. And that could cause some serious problems. I mean, can you imagine not being able to pay your employees or cover your office expenses? So let's hope that Silicon Valley Bank can figure out a way to get those uninsured deposits released in an orderly and timely manner. Otherwise, we could be seeing a lot of furloughs and layoffs happening.